Hello, I'm John Chapman. I'm a principal in the investor rights firm of Chapman, LLC. Our firm has been investigating the Hampton Capital management scheme for several months now. Hampton Capital was purportedly a hedge fund, and over a period of about a year, from the fall of 2010 through September 2011, more than 70 investors, mostly investors from Scottsdale, Paradise Valley, that area north of Phoenix, were drawn into Hampton Capital with promises of steady rates of return, safety, only to find out when the state regulators moved in September of 2011 that it was all smoke and mirrors, that Hampton Capital was nothing but a fraud, and they had been deceived as to the safety of their money. Their money was in fact all gone. So we learned that more than 70 Arizonans, many of them retirees, have lost their retirement nest eggs, and many of them don't know where to turn. The Hampton Capital hedge fund was the brainchild of a fellow by the name of Tom Hampton. Mr. Hampton was not licensed or registered to sell securities, but he set up this hedge fund anyway and set up shop with a securities broker by the name of Tim Moran. And so Mr. Hampton sat in a large office filled with computer screens, and over a period of 1 year proceeded to lose all of the money that was entrusted to him. His big idea was a customized computer program, a software program that would supposedly enable him to exploit weaknesses in the stock market, but it never worked right. And losses began almost immediately and escalated over the course of that one terrible year. And instead of coming clean and reporting to his investors faithfully what was going on, he wallpapered over the problem and lied about it in account statements and reports to his investors, told them that everything was going great and that they were earning money on their capital. That wasn't true. They were losing the capital. It was going down to zero and getting worse every day. Our firm has focused its attention on the way Hampton Capital was marketed to Arizona investors. Many investors went to a securities brokerage firm where large meetings were held, and the Hampton Capital program was promoted, and its promoters extolled its virtues and explained it was safe, and it would produce a reliable high rate of return, and so it was suitable for retirees, folks who wanted to be able to sleep well at night. Nothing could have been further from the truth. This security, Hampton Capital, had never been investigated or approved by regulators. It couldn't be sold lawfully. It was in fact undercapitalized, a very high-risk operation, and nobody should have been approached by securities people and urged to invest. We're focused on the role of a very large securities broker-dealer firm that essentially allowed all of this to happen. They were supposed to be the cop on the beat, and they were supposed to stop illegal activity, and instead of doing that, they were asleep. They didn't do their jobs, and it's appropriate now that they pay for the losses resulting from their failure to detect what Hampton was doing and shut it down. Folks who invested and lost money in Hampton Capital shouldn't wait for something to happen to relieve them of the burden and to put money back into their pocket. It's not going to happen. Hampton Capital investors cannot afford to sleep on their legal rights. And so we urge these folks to pick up the phone or get on the internet and contact the investor rights firm of Chapman LLC today. Many of the claims we assert on behalf of investors are very time sensitive, and accordingly make this a high priority and contact us. You can talk to an attorney today. You will not incur any charges in doing so, and we'll tell you whether or not you have a claim to pursue. Hope to hear from you.